So Bitcoin is looking incredibly scary right now, especially when you zoom out to some higher time frame charts. But there's a catch, and here's the key question. Is this actually a breakdown or just simply a pullback inside a much larger bullish structure? Because when you line up the time frames properly, a very different picture actually starts to emerge. Now, before we go deeper into the charts, let's talk macro, because what's happening behind the scenes right now is structurally bullish for Bitcoin. And US financial regulation is finally catching up, because Senator Loomis said the Bitcoin crypto market structure bill is about to pass soon. We are ready to rock and roll. This isn't resistance. This is technically alignment, because clear rules bring institutions, institutions bring capital, and capital changes the market structure. So with that being said, this is definitely not something to ignore. And even governments are admitting that Bitcoin cannot be stopped. And according to Russian President Putin, it's impossible to ban Bitcoin. Now, this is a big statement. When even nation states acknowledge Bitcoin's inevitability, this stops just being a speculative asset and starts more looking like global financial infrastructure. And on top of that, legacy finance is actually building on chain, because Swift just announced themselves and 30 plus banks are designing a blockchain ledger to support tokenized assets alongside existing financial systems. Swift already connects over 11,500 financial institutions across 200 plus countries. This isn't crypto replacing TradFi overnight. It's TradFi integrating directly into blockchain. Keep this macro in mind as we go through the charts. Now let's start with the most important chart of the day, and this is the monthly time frame. And Bitcoin is currently respecting a strong monthly support and demand territory, and it's been respecting this support line for the past couple of months. We had a wick down into it in November, and right now we are also sweeping down into this pocket in December and holding this structure. Now, in the past, this level has already proven a significant marking or turning point for price action, because Bitcoin ran up, came back into this demand zone in April 2025, and then pushed to a new all-time high. So right now, we are simply revisiting the exact same demand zone from the past that led into that new all-time high price action. So as long as this monthly support remains intact, the broader trend is not actually broken. Now, when you combine this with regulatory clarity and global infrastructure actually being built, then the higher time frame levels matter even more. Now, let's look at this in context, because context matters. And heading back to our 2-week time frame, yes, this current setup looks uncomfortable and it resembles past bearish structures at first glance. But here's the difference. In previous cycles, those breakdowns happened after monthly support actually failed to hold. So in April 2022, Bitcoin was holding a support line, ran into resistance, and then placed a lower high and lost the current support, the previous support, which was roughly at 34K, and then it entered into its bear market. Right now, the setup looks a little different. Bitcoin is hovering above a key level of support and is actually holding the line. So monthly support is still holding, and on the 2-week time frame, until this changes, this chart is just a warning, not confirmation. We have had no confirmation or loss of structure and are actually sitting back down on a macro demand area. Now, dropping down to the daily time frame, it's pretty evident that Bitcoin did lose a macro support trend line, but at the same time, it's actually swept back down into the demand area on the daily time frame. Now, this demand zone roughly sits at about 85 to 83K, and in the past, i.e. November and in early December, both of these previous occasions led for a run-up into the supply. Now, the supply sits at 95K, and we have seen previous resistance points in this area. So, again, we have lost the trend line, but we've had multiple days in this territory where the bulls are remaining firm. And to take control here, what we initially need to see is a climb up under this level of resistance and initially breaking through it and pushing back into that imminent supply, which sits roughly at 95K. 19k. So this is where the bulls could step in, and this is a trading range. You can see that price is caught between a level of resistance and a level of support, and right now we sit back down in that demand territory. So the trend line breaks, liquidity resets, and demand gets tested, and right now that demand is holding strong. So let's now look at the 4-hour time frame, because on the 4-hour structure, the chart looks very clear. Again, we have a internal trading range between 4-hour demand and 4-hour supply, with 94 to 95k being the upper resistance of supply and the low sort of 84 to 85k being the initial demand territory. So Bitcoin has recently swept the sell side liquidity below this range and has quickly reclaimed the value. There was almost pretty much a V-shaped recovery when we swept back into the demand. So this isn't indicating weakness, this is indicating liquidity collection. And after these sweeps, price usually looks for the next objective. And right now that's initially pushing up to the wick from the 17th of December and breaking through 90k. And the next level of resistance to actually reclaim to push up to the supply block sits at 92k, which is these highs from mid-December. If bulls can step into gear and start reclaiming these levels, then it's likely that a push back up to the upper supply zone on the 4-hour between 94 to 95k is highly likely. Now, this lines up perfectly with daily demand actually being respected. We have the potential of a bottom building, and the 4-hour time frame correlates with it very nicely. So when you actually stack it all together, Bitcoin's monthly support is holding firm. We have the 2-week time frame that looks scary, but we've had no confirmational loss of structure. The daily time frame is currently testing a range between supply and demand, where we're actually sweeping into the demand and seeing positive relief from the bulls. The 4-hour time frame shows the compression with the supply block above, waiting for the bulls to step in. And really and truly, it doesn't look like the market is falling apart. This looks like a corrective phase inside a much larger structure, which now leads us to look at Ethereum. And this is important because Ethereum recently broke out of a major trend line. And we'll get into that trend line in a second. But looking at the 4-hour, you could evidently see that we've had 2 perfect areas of respected retests in this structure. And this is where the bulls are stepping back in. In fact, we actually created this demand zone in late November, retested it in the 1st of December, and have once again come back in what looks to be sort of like a 5-wave correction here. You had a wave 1, a wave 2, a wave 3, a wave 4, and then a wave 5 back into this demand zone. So, this shows that buyers are actually defending the value, and it's exactly what you want to see after a breakout from the respected demand zone. Break, hold, and build above key levels of resistance for pushing higher into supply. Now, ETH's imminent supply and resistance sits at 3.4k. And if the bulls can step into gear here and momentum continues, then this is the likely scenario to push up from roughly 3k into that supply zone. Ultimately, if we do see a rollover, this is where potentially ETH could start to build some sort of double bottom back into demand before going for that push. Nonetheless, the buyers are stepping in. Now, speaking of that trend line, let's look at the 2-hour time frame, because this is a trend line where in the past, since the highs at sort of 3.4k, resistance was being met. And ETH, was under this resistance for quite some time. And fast forward to late December, ETH actually got the breakout of this resistance trend line. So this is a very strong signal, and it's exactly what you want to see after a breakout. You tap into demand, you sweep the liquidity, bulls step in, break the trend line, hold it, build the next leg up, and look to push back into the supply, or where we actually initially created the first point of resistance on the trend line that's actually been broken. So ETH is building structure whilst Bitcoin consolidates. So the key things to take away, yes, some charts do look uncomfortable, but the 2-week time frame has shown no structural loss of foundational support. And this is historically where we see giga bounces for Bitcoin, it currently holds well, and the monthly is showing us that we're actually respecting the monthly support and demand zone in the 84 to 85k territory. Lower time frames also keep building structure with compression between supply and demand, and the bull's actually stepping in off of this demand territory. ETH is currently quietly constructively building a reversal structure, tapping the respected demand zone it's held since late November. And macro keeps pointing towards adoption, not away from it. So really and truly, key things to take away: respect the levels, respect the structure, and do not confuse volatility with failure. Now, if you want to support the channel, the links below are there for you. You can trade on the platform we use every day, get fee discounts and bonuses. It's completely optional, but it really helps the channel grow. So thank you for being here, and I'll see you in the next video.